Pakistan is experiencing what its authorities term as transitional pain, following the International Monetary Fund's approval of a $7 billion bailout to support its struggling economy. In response, the cash-strapped nation has eliminated 150,000 government jobs, shut down 6 ministries and merged 2 others as of the end of September.
We have to broaden the tax net. We have to get rid of loss-making entities. We have to go for the privatization. We have to control our public spending.
Pakistan's economy has been dependent on IMF bailouts and loans from friendly countries to service its huge debt, which swallows up half of its annual revenues. Pakistan, in July, agreed to its 24th IMF payout since 1958, in exchange for unpopular reforms, including cutting back on power subsidies and widening its chronically low tax base. Pakistan is negotiating a $12 billion loan reprofiling from bilateral lenders, $5 billion from Saudi Arabia, $4 billion from China and $3 billion from the UAE for a 3 to 5 year period.
I would say what they have done is what a brother does for a brother and friend for a friend. These brotherly and friendly countries have helped us previously as well as this time. They have repeated the history by helping Pakistan wholly.
About 40% of Pakistan's debt is owed to external creditors in foreign currencies. Its biggest single creditor is China, and Chinese commercial banks at just under $30 billion, followed by the World Bank at more than $20 billion. In a nation of more than 240 million people, where most jobs are in the informal sector, only 5.2 million people filed income tax returns in 2022. In July, Pakistan resorted to unusual methods to increase its tax revenues, blocking 210,000 SIM cards until taxes were paid.
We are empowered under the income tax ordinance that anyone who is supposed to file a return and he or she doesn't file the return, we can block his or her SIM.
This action didn't go down too well with the public, who believe their politicians are the biggest tax evaders who are not held accountable.
Do the MPs and ministers pay taxes? Is anyone taking away their SIMs?
While the Pakistan stock market was enthused by the latest IMF bailout, the common man is a little more skeptical.
This IMF loan will resolve our balance of payment crisis temporarily, but until when it will go on?
The latest economic crisis has been the most prolonged in Pakistan's history and has the highest ever inflation, pushing the country to the brink of a sovereign default last summer before another IMF bailout. The Economic Brief, DD India. Now we are talking about Pakistan and the IMF bailout and the compromises that Pakistan has to go through. Is Pakistan, in your opinion, in a debt trap, sir?
Their structural problems remain unchanged. They will gain some temporary relief with the $7 billion, but Pakistan only has 2 months of foreign exchange, for 2 months of exports, enough foreign exchange to cover 2 months. Many of the recommendations of the IMF will be very painful for ordinary people, and this will imply some degree of political conflict. So the country is not out of the woods by any means at all.
Dr. Sen, can the Pakistan economy be liberated from the political instability and the military interference? Because, the economy seems to be held hostage in a sense.
I have written about this at length, and my view is that the underlying political problems are very difficult to address. It requires a fundamental societal change in which you have genuine democracy and accountability, which means the army's role has to go into the background completely. And I don't see, given Pakistan's history, how that is feasible.
Also, is there enough entrepreneurial zeal in Pakistan itself? Can Pakistan hope one day to become like the UAE or even Malaysia or Indonesia?
Some entrepreneurial zeal is always present in most societies, but in Pakistan it's been dormant for a very long time, and it has been a very politicized economy with an absolutely extraordinary amount of corruption, with the senior officers usurping land, investing in real estate abroad. So this is very difficult to get out of because these are the people who remain in charge. And how do you change the situation and take them away from power? So this, I think, is very difficult. But let me add something which I'm reading about a great deal in the last few days. Pakistan is poised to become the fourth largest possessor of oil reserves.
So
It is possible they will auction the rights and gain significant foreign reserves.
well, that's good news for Pakistan. But looking at how indebted they are to China already, $30 billion owed to China. China investing in the Pakistan Economic Corridor, China-Pakistan Economic Corridor. And there is also a lot of money that the Pakistanis owe to Saudi Arabia. Do you think that those countries will take advantage of what you're talking about?
You see, the Chinese gave out these loans, and the loans were very heavily padded to satisfy domestic Pakistani claimants. So these loans are very expensive. So this is a problem for which they need actually very significant resources, and I don't see how Pakistan will generate the export surplus to service these loans, repay these loans. Pakistan's bonds are now priced at 12.43%, which is the third highest in the world after Russia and Kazakhstan.
We'll leave it there. Thank you very much, Dr. Gautam Sen. Thank you for joining us from London and enlightening us on a number of issues about the global economy. Thank you, sir.